parallel channel for a long time, since January, December. Finally broke through, and it has proven really good for me. But I want to see a closing candle above 1162 on 1 hour close. That'll be roughly around 12 o'clock. So we got 15 minutes before that actually happens. 10:33. You guys already know if you've been watching, been following along on Twitter. Even though I'm still getting a lot of heat. Like, oh, why? When are you gonna give up? When are you gonna think AMC is not gonna go? Because I don't think that's gonna be the case. I think AMC is going to see all-time highs. It might have forced it into a longer time frame, but in my opinion, it's going. It's gonna take a while, but it's still gonna go. And every dollar that everybody's been that's down, every single dollar is gonna be returned back to you as long as you're willing to hold. That's not financial advice. That's my opinion. This is why I continue to average in, average down, and watch these charts and share with whoever wants to listen. But right now we are bouncing off of the top support line or the top resistance line of the super macro descending broadening wedge, which is a big retest of this level, and that's where all the liquidity sits on the daily chart. All the buyers are sitting right there because they're looking at it the way I'm looking at it. Well, the algorithm, I should say, maybe. And I have these lines here specifically for this reason. So we just touched the tip of the iceberg today, and I'm still expecting 1033 to hit. Because that's where the line is. Right here. And that says we will hit, we may hit it anytime soon. Today is what, the 29th? Maybe tomorrow, Wednesday. We'll touch, tap it, bounce around for a little while, and then start making our way back up by September. Start of September. Yeah. Last average down, I agree. But see, everybody's been saying it for years. We all been saying it, but they just continue to play the charts, man. But I have faith in my own technical analysis. I've made money on a lot of these runs, on all of these little runs. Actually, pretty much all of them, on options in order to hedge the downside move that we've been having. This is another way that options work. It was designed to be a hedge of market moves. That's what it was designed to be. But you got to understand technical analysis. You got to get in and get out. You don't diamond hand options. You know, you diamond hand shares, but not options. But that hedge, that they help in order for me to be able to, you know, not be so in the red. I'm in the red, don't get me wrong, like pretty much everybody, but I'm probably not as bad off as other people that have been holding since 72, probably bought here and just rode this all the way down, you know. But it's because of options and because of playing these moves. You know, you could have played downside moves too. I've done a couple times. I've done cover calls here and there on the stock, but I play other stocks as well, which I use potential profits off of those in order to be able to buy back in when I think the price is finding its bottoms, which I did a lot of buying back in the $3-4 range when that should have been its bottom. But they did what they did to drop it back down. So now we're in a new bottom, but we're playing in, you know, this new channel or parallel channel, and that's really what it looks like right now. So I'll hide the indicators. We're in this parallel channel rather than the ascending pattern or bull pattern. We're looking at a bullish channel we were in. It's more looking like now we are in a parallel channel, top and bottom, and now we're looking to play the bottom. We played the top, had a false breakout, came back in, held the midline of this parallel channel for a long time since January, December, finally broke through, and now we look like we're playing the bottom end. So this is the bottom end based upon recent, or not recent, but the more all-time lows. We're just going to test the bottom. Once you go to the bottom, you eventually go back to the top. It is what it is. Started at the top, came to the bottom, went through the top, came back to the bottom, and now we're going to go back to the top. So if we don't buy down here, I don't know what else to tell anybody, you know. However, can something go lower? Can it break this channel? It can. It broke this channel up here when we squeezed. This is why this is, in my opinion, why they dropped it back down. This is out of bounds, right? The ball has to come back in bounds at some point. So it did break out of bounds in this and then 72 squeeze in the June squeeze. It came out of bounds, so they got to re-inbound the ball, right? It's like basketball talk, right? Or whatever sport you're talking about. If it breaks below, in my opinion, they got to re-inbound the ball back into the court. This is the court right here between $10 and $191. That's the court we playing. So at some point, the ball has to go back and play. You can't just you can, don't get me wrong. Again, I can't. This is the stock market. This ain't basketball. However, the way I see it, I try to make things as simple as possible. But you got to know where the court stops and where the court ends, right? And right now we're just at the bottom side of the court. You know what I mean? So I wonder how much money was made for some during the 72 run. I just can't imagine. Well, if they were playing options, people made millions, straight up. If they played options, you made millions. You know, if you just played shares, if you had 2,000 shares, let's say, and you ran from $7, $8, what was $8, even you had like an average around there, you were up 200 grand, easy. You know, but people wanted that million, think it was going to be easy to do so. But you know, if you played options, people made millions. You know, it's just how it is. If you institutions, they don't need to make that much off of it because they're playing with bigger money. But people are making, you know, investors or individual or retail investors are playing with a lot smaller amount. They want to go for home runs, which is cool too. But if you had at that time and you understood what you were looking at, yeah, you could have made millions. You know, as long as you had the wherewithal to take your profits, because those millions could have turned into negatives on some of those moves back down. You know what I mean? So, but that's why we also follow Wyckoff, because Wyckoff tells us what situation or what stages we're in. All right, that's why I always look at the Wyckoff charts. So every move up like that always has a move back down. So we got to be prepared and, you know, understand there's always a backup LPS. Like there's an LPS, there's a backup LPS, there's a sign of strength, you know, and then it goes into distribution. Now it goes the opposite way, and there's accumulation. It goes back. Right now we're in accumulation. Again, because people are like the accumulation phases, people are buying shares, people are buying down here, getting prepared to play the other side of the court. So, and that's just the way the stock market works. But you got to be able to see the court. What's up, Zogan? In Wyckoff terms, we call those the creek lines. But it's a way to show it on the charts. So when you talk about the creek, or you see jumping the creek, that's what the smooth moving average represents. So when you jump the creek in Wyckoff terminology, that is your squeeze line. Man, that candle looks terrible. Zogan, you talking about this, where we're at now? Yeah, I think you're talking about this. Well, we'll close at the bottom. September, we're going to close right at the, look at this. We are going to close right at the bottom of January 2021. It's crazy. So you get this move, and I'll find the schematic in a little while, but you get this N style move. I talked about this on one of my old videos, one of my past videos, but you get this N, up, down, and then up. Oh, that's a big up, but let me let me start from here. Up, down, and then you get up. That's what's gonna happen. It may take a little while, but this end move is how stocks move. It's gonna happen. Again, this is the court we're playing in. This green and red. This is the midline. We hung around the midline a little while. We broke down, and now we're going to come back up. It's just, that's why I have these distribution lines. Accumulation, distribution, accumulation. Again, the next one is going to be distribution. So as we accumulate, we're going to go up. Once we get there, look for distribution. Anybody who holds past this number right here, now they're playing with fire. Yeah, on those wicks, I see what you're saying. It looks pretty good. It does look pretty good. It is fundamentally getting better, but it's fundamentally getting better, Nathan, down here, which is a good sign. Right? They don't want it fundamentally. I mean, well, the shorts don't want it fundamentally getting better up here. They want it fundamentally getting better down here so they can accumulate, buy as many as they put, shake everybody out, get their shares out of their hands, buy as much as it is cheap so they can run it back up. That's how it works, right? That's how it works. So when they run it back up, that's the markup phase, or the sign of strength and markup. You only want to, the point of stocks is to buy low and sell high. They don't want it up here because they think the valuation is still down here. But if it improves, that while it's down here and they own a bunch of your shares that you got shaken out of, that's when they turn it around. So this is not the place to sell. If anybody's selling here, or if they're getting discouraged or whatever, this is not the place to sell. You don't do that here. You should have done that up here. Oh, it's going down. I'm scared. Then you sell. But if you're doing it down here, Godspeed to everybody that is thinking that way, because that's not where it's going. You got to be able to see the court. You got to be able to see the field, and this is the field we're playing right now. This is the trading range. This is why they call it trading ranges. The green is the base. The red is the ceiling. You see it, David, right? That's the creek line, and the creek can be found on several different time frames. Once it crosses that line, you go. And this is what I was trying to explain to everybody, why I knew AMC was going to run. This is how I can always consistently time. Well, this is one of them. I have several different ways that I can consistently time and actually give specific numbers on these charts. And I'll tell you where these particular spots are at. People can believe me or not, but my hit rate is pretty solid. But they need the shares. They want the shares down here. But AMC is going to improve, and they know it. As it improves, they want them cheap. In my opinion, if we don't spend as much time down here, a super macro retest, it'll be quick. It can be quick, yeah, it can be. Now we gotta watch the time. This is the monthly chart, obviously. But I'm looking for, on a daily, I'm looking for some volume to start coming in heavily, because again, institutions are also watching these lines. The same way I'm watching them, they're watching them. And then AMC's failing, like I told you it would. It's coming back. It's going to go to 1033. There's no way it just turns around and starts running here. They got to collect that money down there. There you go. I appreciate it. Definitely, man. That's why I want people to at least be aware of where we are, and, share this with somebody, share this on Twitter, whatever. People that you think want to hear this type of a message, but put it out there, because I want people to at least see this, because everyone, I get a lot of inbox messages. It's to the point where it's kind of crazy, but I don't turn anybody away. I tell everybody where it's at. If they want to believe me or not, it's cool, but this is not the time to really lose faith. If you wanted to lose faith, you should have been losing faith at $70. You don't lose faith now. You didn't come this far to come this far. All right, so let's see. They need these shares. Don't give it to them cheap, because they're just going to do exactly what I said. I want to start seeing some volume start coming in. Once we hit that bottom at $10.33, in my opinion, I want to see 1 billion shares traded on AMC. I mean, right now we're still only doing 20 million. What's today's volume? 17 million today, and it's half the day is already gone. Yeah, I want to see 1 billion shares traded immediately. Low volume push downs on sell orders on low volume is bullish. It may not feel like it's bullish, but it's bullish. What you don't want to see is high volume sell offs. That's bearish. But low volume push downs is a bullish reversal sign. So once we hit bottom and it's confirmed, you'll see volume spike up out of nowhere. Heavy volume. If we go below that trading range, even a little bit, like $9.80 or $9, which is possible, $9.80, everybody and their mother should be buying shares down there. Straight up. Everybody and their mom should be straight up buying shares down there. I'm hitting everybody. Everybody I love is gonna know. Look, I told you about AMC before, but right now, listen, you need to be buying. And if you don't, well, you can't say I didn't tell you. You know what I mean? Yeah, it's true. I mean, people attack. I mean, it is what it is. But, I bought Moderna. Let's see, just more recent. I bought Moderna at $98. Right? Moderna went up 15%. I told my dad, buy Moderna. He bought it. He's happy now. So, it's just how it works. Some people bought AMC early. Some people, I'll give you another example. Dogecoin. When Dogecoin, before it had its run, they were happy when it was up. Some people didn't listen to me when I told them it was going to go up. I bought Dogecoin at 5 cents. It ran up to 70 cents. I sold. I wasn't holding because I know about buy the rumor, sell the news. When Elon went on TV, I got out. I'm like, nope, I'm out. Because as soon as he said something on Saturday Night Live, it's a wrap. And I got out. I made a couple grand off of that, easy. So, but people when they finally started to understand it, and they were like, really, how much money did you make? Oh, really? I want to buy it now. It was like 60 cents. Okay, I told you before that you didn't listen to me, but now it's at 70, 60 cents. You can try, but I think the majority of the move is over. They're like, that's gonna go again. It's gonna go again. And then got busted back down all the way to $6, and they mad at me. I mean, listen, I tried to tell you early, but this is how it works. So Dogecoin was a big one. But that's how it works. People get mad. They get mad. But, you do the best that you can, but they also understand that, your intentions are good. At least put it out there that your intentions are good. But it's this opportunity that you're seeing. You don't want your people to be left out. That's it. And then that's how I treat everybody. This is why I talk the way I talk with everyone. This is why I put the information out there. This is why, it's me. It's my face. It's not like I don't have any. That's me, right? It's my name. So I'm telling you, everybody that I see online in my book, in my opinion, if I spend even 5 minutes talking to you online, you're a friend. You know what I'm saying? And I'm telling you like I'll tell my friends. Yeah, so it's negativity, but look, I don't need to do this. I don't. Some people may need to, but I'm not one of those people. But thank goodness. However, you still move accordingly. That's just my motto. It's about character. At the end of the day, if it's not for you, at least you try. And that's what I try. I can't walk around without saying I tried. All right. And I've been saying that for the last 2 years. I've been posting about AMC pretty much every day for the last 2 years on it until it took it obviously a step further for several reasons. Right. So I just took it a step further, and this is why I have this little channel. You guys are joining me here now. I put it out my TA, putting my videos out, and so on. But I haven't left. You know what I mean? New people might pop up, but I'm still here. I've been taking heat for 2 years already. Right? But I'll tell you what, I've been right a lot of times. To the positive and to the negative side. That's all we need to see. Pattern. Oh, before the run up. Oh, nice. I thought you meant after the run up. Okay. All right, Nathan, good money. There you go. There's 100% run for you right at close. And that's the power of this thing. You tell your people. All right? If they really your people, I mean, if you really, as long as you have the understanding of what's happening. I'm not saying go buy, I don't know what, BBBY or whatever that at, when it was at $30 or something like. I mean, that's a different story. Oh, after they declare bankruptcy. And you say, okay, go buy BBBY. I mean, I never really saw much potential in that play. I mean, people made money off of it, I believe, but that was a whole other ball of wax. But yeah, that's how you do it. You let your people know because you believe in it. But that smooth moving average, there you go. That's your creek line. Every time you touch that creek, you squeeze. And these squeezes can be a lot. This last one was a big one. Obviously, 100%. Squeeze up, broke the descending broadening wedge. That was a major squeeze. They dumped it. It was about to do it again right here. I keep showing this. It was about to do it again. It held above that line. It broke through. It was about to do it again. That's when we got the Judge Zern signing. Right when it broke above again, ready to run. Judge Zern signed. It's like they timed it for her to sign it when it was about to run. Perfectly timed. It's actually kind of amazing. And that's when Judge Zern signed on Friday, August 11th. She signed, dump. And that's what started it. But that looked as if it was a spring from Wyckoff terminology because of the fact that it bounced off the midline of this particular descending broadening wedge. It just bounced off of it. So I'm like, this is it. Spring test. We get a move up. And then from there, you get that second move, and all of a sudden, naked shorting. Bang. just systematically naked shorted all the way down, right when things are about to move to the upside to possibly break it again. So these guys are good. That's all I can say. These guys are good at what they do. Is what it is. Now, I appreciate it, David. That's what it's all about. But nice move though, Nathan. That's how it works. So she made a quick 100% on her money because they went for 440 that closing day and then ran to 750. Beautiful, in and out. I'm pretty sure she was happy. She was a happy woman that day. You know what I mean? If you put 100 when you say, Nathan, you say 40 to 70. Fundamentally speaking, it always comes back to mid range, right? So let's go back to this chart. We go back to the chart. We go back to the playing field we just talked about a few minutes ago. That's the mid range. It always comes back. Everything comes back to equilibrium at some point. You got this is if your field, like I talked about before. This is the court, so to speak. You at the bottom, you at the top. You at the bottom, you at the top. The reason we held around here so long after looking at the reverse split and everything, because that's the midline. We bounced around that midline equilibrium. This is also called known as point of control. You probably heard that word thrown around a couple of times. Point of control is basically where the price tends to return to regularly. So at some point in time, you're going to come back to what's considered the mid-range or the midline or the point of control of the stock. So for it to continue to run up, yeah, stocks can do that. But 9 times out of 10, if you're in a range, you're going to come back to the center of that range. It's like gravity. Like it's going to pull you back to the center. You can't just, might be able to go to the moon for a little bit, but you're going to come back to Earth at some point. You know, if you might dig yourself underground for a little bit, but you're going to come back to come get some air sometime on Earth. Like it's just, this is how it is. But you need to know where you are in the greater scope of things in order to find out where you should be or what you should be doing at that point. You know what I mean? So instead of saying underground, I'll say underwater. But at some point, you're going to come back up for air. All right? Space, up here, this is the moon. This is the water or the ocean. You're going to come back for air, come back to Earth at some point. And this is Earth. So roughly, like you said, between 40 and 70, I can definitely see that range. This is the average range between the two. So the mid-range is about $34, $74. Very easy to get back to this range. So anything underneath this, knowing that you're going to come back up here at some point, is game. It's fair game to buy until it's not. Even if you drop further down, as long as you understand this, you are going to come back to equilibrium at some point. We're almost there, in my opinion. At the bottom, I mean, we can, like I said, a sweep lower can happen. That tends to happen on smaller, let's say on a smaller stock or a smaller time frame, 15-minute, 20-minute time frame. What you'll typically see when the stock is range trading, again, this is a super macro chart. But what you'll typically see on a range trade is you get these up and down waves. When you get a false breakout or a breakout of a range, what you typically will see is a range breakout in the other direction as well. So right now we have a range, we have a bottom that's been established since back here. So what you normally see is we most likely can bounce off the bottom of this area. However, because we overextended outside of the range up here, the way this operates a lot of the time is that you get the opposite reaction on the opposite side. So you may get an extension, this is a liquidity sweep, even lower than that baseline. So I'm not hoping for it because again, I see big money is posting here. I'm going with what big money is talking about. And I can see their orders posted right at this area ending at 1033. If we sweep lower than that, it's just part of the game. But that would be an ultimate discount, in my opinion. That's where you really want to buy. And I would hope so. Again, unless there's more nefarious things going on with the stock than we can even really fathom on the chart. Outside of that, but that would be like the final level. Based on this chart, based on support levels, you can come back lower and sweep into the $8 range. I'm looking possibly somewhere in the $9.80 range. Very high possibility, but a sweep into that area a little bit before swooping back around. Buyers would step in because, again, you're out of bounds. Just like you were out of bounds up here, you'd be out of bounds down here. Buyers step in like, oh, that's below value. I want a good deal. I want to go buy this TV for It's $1,000 TV. It's worth that. I want to buy it for $200. Let me go snatch them up. People step in harder. Stock moves back up. Bars pattern looks like that. And that's what we're talking about in terms of time frame, what it looks like chart-wise. We'll bounce a couple times, start to head back toward the median, which is the midline here of the channel, of the parallel channel. We'll hit this, we'll bounce off it a couple times, bounce off of this midline of the descending broadening wedge, probably fail again, about to break out. They're probably halted up here. We'll come all the way back down to this range again, back to the $10 range. A few more times. By that time, the smooth moving average, which is sitting here right now roughly around $64, over time, the smooth moving average continues to fall downwards. It falls downwards until it gets into range, which will be somewhere around the $18 mark. That smooth moving average, or the creek line, as we talked about before, as it falls, it gets closer and closer to the time when volume starts to set in. It pushes it up, and it'll squeeze right here. So my target right now is time-wise is looking basically literally another year. Since APE was actually distributed back here, it's been a whole year. APE was now turned back around into the reverse split on August 22nd. If you just think about this, it was timed so perfectly that it was released in August 2022. It was reverse split on August 2022 the following year, and it's gonna run in August of 2022, August 24, next year for this move. So I'm just calling what it is. We are now, in my opinion, at the halfway point. So it makes sense. I mean, if I'm wrong on anything, if you guys see anything outside of this, please let me know. But this is the pattern that I'm seeing. We have one full year. We have a second full year. So next year we'll start to see the bigger numbers. We could see some spikes over time. This is going to be the area as AMC starts to improve its fundamentals, as it's actually getting better, as the movies come out. They're paying off debt. New distributions are going to be given somewhere around here. As far as offering more shares, they raise more money, they pay off debt, they're going to push it down again. And then, by the time all that is done, squeeze happens next year. It's crazy, right?